Okay, everybody, here we go. It's me, Gregory Mannarino. Monday, April 10th, 2023, and it's still a freak show. It's not going to change. This is what I want to talk about this morning here. If you're watching the bond market like I do, you see the same pattern that you would expect to see in the current situation. What am I talking about? Bond yields are continuing to be suppressed. Not just here in the United States, but around the world. So what does this tell you and me? There is a coordinated effort by central banks to foster that illusion that you and I have spoken about for I don't know how freaking long right now. The illusion of stability is being maintained in the debt market, which is the number one driver of the stock markets here. You know, yesterday I showed you this chart here. I want you to look at this again. The Fed's balance sheet since 2008, where we are right now. $1.5 trillion in 2008, $9 trillion today. Despite this squiggly line here, this is the trend. This is where we're going moving forward. There is no way on this earth, off this earth, or anywhere else that the Federal Reserve and other central banks are not going to continue to inflate. What have I been explaining? What have we discussed repeatedly here? It's literally come down to inflate or die. Central banks have chosen to continue to inflate at all costs. Inflation doesn't matter. You know this. From the get-go, you and I, we laughed. When we heard that central banks were on a mission to raise rates and this was going to be it and the economy was going to suddenly do great because inflation was going to drop, we knew it was a lie. It was never even meant to work. And that's what really bothers me more than anything else here. This fairy tale that has been sold to the people of the world that, oh yes, central banks are raising rates. Inflation is going to get better. It's temporary. It's transitory. No accountability. We knew this was not true since day one. Anyone who bought that, I mean, I would imagine if you follow the mainstream propaganda ministry, oh, they all bought it. Well, they had no choice. They were reading a script here. But there was no way this was going to work ever. And now with this new round of quantitative easing, this is what's going on here, central banks maintaining the illusion. You have to understand this. Look, how do central banks do it? How do central banks maintain that illusion? They have to get into the market and buy the debt. They can't they have to create debt out of thin air, debt, credit, buy debt with it. It's a revolving door. I've explained this to you. They're issuing debt through one door, buying it back through another. Issuing debt through one door, buying it back through another. And this, we've talked about this revolving door for I don't know, a decade. How this process in itself is inflationary, massively inflationary. And this is why we're seeing what we're seeing now. But what no one's telling you, I don't know about other YouTubers out here, but what no one's telling you, I think, at least from my perspective, you haven't seen anything yet. Inflation is going much, much, much higher. And this is by design. This is not by accident. It's not like no one saw this coming here. It's been a freak show since forever here with central banks, you know, propping up the system as they're continuing to do right now. You see, it's an interesting thing. Generally, markets go up, markets go down. That's how they're supposed to work, okay? You know the system here. Generally, there's a buyer and a seller. They try to come to an agreement on a price, and that's how a price discovery mechanism works, or it's supposed to, at least in a free market, which we don't have. This is yet to be defined. But when you have a third party, a central bank in this case, who's not allowing the mechanism to work via propping up the debt market hyperbubble on a scale that we've never seen before in the history of the world, well then, you know, you got what we have here. And not only, people, are you and I and everyone else here paying the price for this in the form of inflation tax, but we haven't seen a damn thing yet, and I mean nothing at all. Nothing is going to get any better. The mechanism, the twisting, the freak show is going to get monumentally worse moving forward. The cost of living is going to continue to rise. Oh, they're going to tell you Again, and we've discussed this, that what you're seeing with your own eyes, what you're feeling in your pocketbook is not real. Oh, it's not real. Ignore that. Remember, it's temporary. Remember, it's transitory. It sickens me to the core of my being how they float out these so-called authority figures to dictate our lives to us. Think about that. What you're seeing is wrong. This is what's actually happening here. And nobody is held to account. Let's look over at this market. Okay, so as I am doing this video blog, stock trading doesn't start for about 38 minutes. Okay, lovely. We got stock futures lower across the board. Nothing major, lower anyway. Look, it would be a miracle, and maybe we'll finally get one, that this market gives back just a little. If you notice, we had this, and we're still in the center of it, this banking crisis, this consolidation of the banking system, but don't call it consolidation here. Oh, no, you can't call it that. They're integrating it. I love the word they're using here. They're using integrating. They can't use consolidation. Honestly, these words are chosen for a reason, okay? Integrating sounds, I guess, better than consolidation. I don't know. What's your thoughts on that? But this is going to continue to go on here. The major Wall Street banks are getting massive influx of capital right now. Again, you knew this from at least 8 months ago. The banking sector was in trouble, which means you're in trouble, all right? No deposits, no loans, no deals. I mean, you know, we've discussed this at length for at least 8 months, but no one saw this banking crisis coming. No one except you and I. And I'm telling you right now, this consolidation here is not an integration. It's consolidation is very, very dangerous. It's the next step in their quest, and they're going to fulfill it in issuing a completely digital system here. FedNow, that's part of it as well. You're seeing all the little parts come together here. It's interesting because think about this. In order for this new system to roll out, they need the new system to completely collapse. So what does that tell you and me? We could be very, very close to a full-on collapse of the current system. And again, what are they going to do? They already have it set up. It's the war. It's China. It's Russia. They're going to point fingers in every direction you can imagine and try to keep the blame off of the Federal Reserve. Look at what they did here. Do you notice how, again, this banking collapse issue, the smaller institution, the regional banks, this is just kind of gone now. It's gone. The regulators weren't held to account. The U.S. Treasury wasn't held to account. The Federal Reserve, absolutely not. Even though, think about it, even though Fed Chair Powell admitted on international television, okay, while he was being interviewed, that the Fed knew there was a problem back in November, but failed to act. It's amazing how they can twist the narrative here. Remember, look here. Look at Donald Trump. He got arrested. Do you find the timing of this a little interesting here? Banking collapse. They have to maintain the squeaky clean illusion that the Federal Reserve, they're great, they're in control. So they throw these things out here. You understand? Everyone's talking about it. You still can't get away from it on the mainstream. Donald Trump, Donald Trump. But forget about the banking crisis. Forget about how the Fed, the regulators, the U.S. Treasury, they missed this whole thing. No, it's a setup. You all know that. But this is what they always do. A distraction, a deception, some mechanism along those lines here, people. But just keep your eyes open and raise your awareness. Going back to this market, stock futures are lower this morning. The 10-year yield lower this morning. Global bond yields lower this morning. How is that happening? It's just a miracle here? No, it's central banks. They're buying it all. They're buying all the debt to maintain that illusion of stability, hoping it's going to push cash back into the stock market. Okay, we got cryptocurrencies relatively flat. Bitcoin around 28,000. Gold under a little bit of pressure this morning. Silver relatively flat. The relative strength of the dollar this morning is higher. MMRI sitting at about 216. Pretty interesting in this kind of a situation, but that's where we're going. We're probably going lower with regard to the MMRI. Keep your eyes on that. Free to you, free to me. Link in the description of this video. And you got crude oil here sitting over $80 a barrel. And in my view, the longer run for crude is much, much higher. It may go down first. It's going to waver around, people, but it's going much, much higher. Like I always tell you, you and I, we're way ahead of the curve. We know exactly what's going on. We know why things are happening the way that they are. But I don't want you to forget this. I want you to remember that. Look, go, and this is available to you or anybody right off the Federal Reserve's own website. This is not going to stop. It's not going to stop. And with all the new rounds of quantitative easing that are going on, the massive amounts of debt buying, do you really believe inflation is getting any better? Like our lovely politicians and Federal Reserve presidents are telling you? It's all a lie, people. It's all a lie. I will see all of you at the end of the day, 1:05 p.m. Pacific Standard Time for my live stream. Please have your questions ready for me. That's really what that's all about, is so you and I can interact in real time. All right? I'll see you later.